Okay, hello everyone who's joined us for the latest edition of the Fintech Book Club. My name is Stessa Cohen. I'm an independent consultant and analyst, and here with my Fintech Book Club members, Jim Perry and Effie Pallarino. And today we're discussing Money in the Meta Universe by David Birch and Victoria Robinson. So I just want to
I
welcome
love
everyone.
that you said meta universe, right? Instead of
Metaverse universe.
you
All right,
know,
I still have.
that's a discussion we should have, the meta universe, right? And
There
how
you go. There
serve
you go.
will
So I'll ask you to introduce yourselves, but first, everybody put in your comments during our discussion, and we'll incorporate them into our discussion and answer them or not, or discuss them, so that we can have a discussion with everybody who's attending. Our next book club will be January 17th, same time, same LinkedIn Live. And just let's go around the room. We usually have Barbara McLean here, but she is not able to join us. So let's just go around and we'll start with Dr. Effie.
Hi, I'm Effie Pilarino. I am based in Zurich, and I am a finance person from birth, as our friend Lida would say. I grew up in investment banking in New York when the metaverse was not even a thought in anybody's mind in financial services. And I look into innovation. I talk about innovation, and this book is such a brilliant addition to what is going on in the world and what our future holds. Over to you, Jim.
Good morning. Jim Perry. I'm a senior strategist at Market Insights. We're based out of Seattle. I happen to be based in Michigan, and as you might be able to tell, I am flying today. And I'm actually so excited, though, to be able to talk about this book. Most of my work is involved with community-based financial institutions around the US, and I guarantee you that for the most part, the metaverse is simply a buzzword to a lot of the bankers that I know. And that's why I think a book like this becomes so important, because it does set up a very foundational conversation about how the ecosystem is changing.
Yeah, awesome. So let's dig in. Let's dig in. And first, I think that, like, as Jim alluded, we need to define what is the metaverse. Do we even agree on what the metaverse is, and how do Birch and Richardson define it? Um, is it a buzzword, or is it a real thing? Why don't we start with you, Effie?
Yeah, I don't think it is a buzzword, and clearly there isn't consensus, as to what it means. I think the authors make it very clear that it is beyond, gaming and augmented virtual reality. They clearly make very solid arguments as to why banks and fintechs should care about the metaverse. And from what I have taken away, it's really the future internet of the in the digital economy. It's really about how the digital economy will evolve, and it's not too far away. So it does include avatars, it does include digital twins, it does include bots, and we'll have the opportunity to discuss those. But that's how I understand it from this book. Jim?
For me, one of the things that I caught both authors speaking towards at various times during the book is something I've actually heard Barb say quite frequently, where they're not just talking about a metaverse, but metaverses, plural. The notion that this is trying to encapsulate a very complex concept of a digital economy that most people don't have any experience with. You know, unless you're a 12-year-old in Roblox or, you know, someone who's actively involved in virtual realities to see what's possible. The notion of stable coins and digital economies and all the rest are the kind of concepts that are on the kind of outside of a lot of people's daily conversation. So I'm glad that a book like this kind of pushes us into that space of having conversations. What are the blocks right now that prevent that digital economy from really coming to fruition? Right now, I think we can easily identify so many things, regulatory, but also cultural, about how we're going to find ourselves exchanging digital currency. I mean, David has pointed out on a couple of different occasions this whole notion that, you know, back centuries ago, the idea of paper money sounded very obscure to people of a much earlier century. Similarly, I think the concept of a digital economy tends to escape a lot of people because it's outside of their realm of experience until you remind them, oh yeah, look at what you're doing with your digital wallet, right? So
Yeah.
again, there are a lot of concepts embedded in their understanding of the metaverse.
Yeah, I too agree with both of you, and I think one of the things that this book in particular brought out really well is the fact that it's a digital economy, but it's also a set of technologies
Yes.
and infrastructure and concepts. So the old view, especially in banking, oh, we got to get a system to do X, right? And we're going to plug it into the architecture. That's kind of gone. You know,
Right.
you have to think bigger and both bigger and specifically. So, you know, it's not just about the bank, but it's about patents, it's about copyrights, it's about um, partnerships, it's about regulations, it's about regulators too. You know, so it's interesting, and I think you know that what you brought up, Jim, about being able to conceive of it is difficult for people. I mean, it, before we had a single currency in the US, so a couple hundred years ago, people were really afraid in the newly created United States of having a single currency. They were afraid of that, you know, but the having all the separate currencies also didn't work. I mean, how do you pay a soldier? How does the federal government pay a soldier if there's no currency, right? How do you have interstate commerce? So it's similar, moving it to the next level of something less tangible, but something that people are already, um, you know, talking about. I remember one of the first conversations I had with a CXO at the bank I worked with was like, what would people use the internet for? He couldn't conceive of any use for it. And, you know, I think that's a potentially dangerous path of thinking for bankers these days.
It's the same classic pattern, right? Why would we need personal computers? What would we use them for on our kitchen, you know, top, right? I think what's interesting is the authors make it very clear that we have the technology, and that's cryptography, basically, the advancements in cryptography, to be able to handle financial services and transactions basically in this metaverse securely. And their big argument, and we know that we are very close to David Birch, and we know when he talks about digital identity that this is core to the metaverse and cryptography. And the authors go to a large extent to discuss the three aspects of um, uh, uh, um, um, shall I say, a smart digital identity or a digital identity that is suitable for the metaverse. So they talk about, this pre-authorization built in, the multi-factor verification of verifiable credentials. I think these concepts that they go deep in the book, and they cover and they explain how they can work. And actually, in the end, they talk about having them being built in a smart wallet. That is core foundational to this metaverse, and not only for payments, the things that you talked about, Jim, all the assets, the digital assets. It's a patent is a digital asset. Your intellectual property is a digital asset. Um, the stuff, the digital assets that you buy in games or in other apps soon will be assets in the classic sense that Stessa, I'm sure would talk about, can I get a loan against those assets, right?
Why not? Why not? Why not?
That's one of the like broader concepts that I think is so difficult for people to begin to wrap their minds around. The concept of digital assets, the concepts around our payment systems. Obviously, the the payments ecosystem is way ahead of other segments of the financial services system in terms of navigating these technologies and actually kind of leading us in these new directions. So I think it becomes critical for bankers, for people in fintech, to begin sorting out, like Effie, you bring up this point about our digital identities, right? And the verifiable, secure digital identities. Think of how all of our digital identities have actually evolved over the last decade, how it's been kind of, as a new technology comes up, there's another piece of it that comes together. And I often think, God, wouldn't it be nice if we could all like start that process over again, right?
Yeah, from
But
scratch.
then, right, but then who's going to be like the institution, the functional kind of organization that manages that piece? Is it banks?
Yeah.
Is it governments? Is it, who's going to be, where are those opportunities to, or is it constantly going to be a piece here, a piece there, a piece there that pulls together this one digital identity that can go across any technology?
Yeah. Well, this whole thing, digital identity as a service, as one of us wrote in for a question, has been actually out there before the term of the metaverse
The
came
metaverse,
around,
right?
and it's just there for banks because they're already, even though consumers rag about them, we rag about them, they're still a trusted institution.
Right.
And the old safe deposit concept can and should go digital, as we've all been talking about, new products and services. Well, it's not a card with your dog's photo on it or being able to use Apple Pay, with your bank account. It's being able to do digital identity as a service. My daughter just passed her driver's test, and she was able to then go right away and get her driver's card, her official driver's license. She had to hand over all this paperwork that they then scanned that's now sitting in a server somewhere. If she could have only given them her digital wallet validating who she is. The people ahead of us in line, visas, passports from other countries, certificates of citizenship, people with stacks of paper coming in that the government already has somewhere, but why do they have to revalidate it all the time? And just this data is, as Birch and Richardson go into great detail, is sitting just waiting to be hacked, right? Or leaked or somehow gotten into, whether it's somebody inside the DMV or not. I mean, it just makes it's actually a vulnerability, and banks are there, you know, just a trusted source, and it's such an opportunity to get in that game.
I was
And
excited to see that California actually passed legislation just within the last year, allowing their driver's licenses to be embedded in an Apple Wallet. So, but is it like a state at a time, a country at a time? You know, how are we going to sort these things out? And that kind of underscores one of the big takeaways for me from reading this book is it stimulates more questions than it does answers necessarily, which is what I love about the book, because that's where we all need to be right now, in that place of having the conversations about where we fit in both shaping and accessing, you know, these technologies, and how we can do it in a way that's going to benefit the largest number of people on the planet.
yeah, yeah, yeah.
I think that the authors wouldn't be, having champagne just because California added the driver's license, although it is progress, right? And other countries would love that too, right? To be able to have the ID in a wallet. But the authors really want to go further and advance in a way that we do have the technology to verify whatever aspect of our identity needs to be verified without sharing the data. That is the big point. And how do we get there? Because it it raises the question, who is the trusted entity that will handle that? I think, I don't know if you agree that the authors probably think that it won't be banks, although it could be banks,
I
right?
felt like it was on the edge. I felt, and I mean, it goes to what Jim was mentioning, and what you brought up in some of our early conversations before, is that are bankers even reading this book? Can they read this book? Is it for them? Are they going to look at the first part, which has, it's probably more technical than a traditional business book in some respects, but I think really gives a firm foundation of what the basic technologies are that comprise digital identity, which is essential for moving all of this forward. And I wonder if they do need to read this book to start
What
them on the.
are fintechs reading this book? Let's not only go
Yeah, yeah,
after the traditional bankers and the incumbents. Fintech should
that's
be
true.
reading these books, the neobanks, because again, for me, the core of what makes this work is what they emphasize, that we have technology that can prove things, in this case, the ID,
Hmm.
without sharing the data. That is
Yes,
so powerful, because I think that most fintechs today, they operate on the older model. They're also
yes,
asking to share the data. They are doing it in a easier way. We don't need to go to the branches. We can do it digitally, but it's the same thing, right? I'm sharing my
yes,
passport, my Swiss residency card, the bill, you know, that proves that, and so on. So what comes out of this book is, how can we build financial services without having to share this data, and yet, be able to verify whatever needs to be verified. And I loved an example that they said at some point that just stuck in my mind. They said, when you're buying shoes and you're paying, right? Does the merchant need to know your name? No. I mean, I never thought of that, right? Because we are all used to, okay, you go to a merchant, you pay, unless you're paying with cash. In all other cases, you do give your name and much more information than is needed, right?
Right. You know
yes.
what
I mean,
one of the other concepts in the book, which I'm really, one of the reasons why I'm so excited about this book and encouraging people to read it, is simply that it becomes important to have a greater understanding of technologies like stablecoins, as an example, because you still see people getting so like crazed over crypto without really acknowledging the how there's been so much movement in the stablecoin space in the last 12 months, even 2 years. I see that kind of accelerating a lot of these conversations even more dramatically. So it's going to be interesting to see like what we think of this book like a year from now.
Yeah, yeah.
Right?
Actually, I Stripe today. My LinkedIn post was about Stripe. That's not only integrating a new payment a platform and infrastructure that Paxos has for stable coins. They're also considering apparently of buying a company called Bridge that has an API for stable coins. So the market is moving,
Yeah, I
and
hadn't seen that.
yeah, it's recent, and in the U.S. specifically, stable coin banks are not allowed to touch stable coins, and
Right.
the business there, but the adoption is happening.
Right.
It's
PayPal is
because
involved.
e-commerce, right? It's
Yeah, yeah.
happening.
Yeah, well, this is where, the regulators, instead of being reactive, really need to get out ahead of this. And I believe, in the Federal Reserve, in the Department of Treasury, I think there are people, but the regulators really need to move a little ahead of the tide because it's happening anyway. And, this is all too symptomatic of banking where we're, you know, also ran. Well, we'll wait for something to break before we fix it. And I think this is becoming, when with all of this new technology is pointing up that, oh, there's a problem in our legacy architecture that won't get fixed with a new fintech partnership. It won't get fixed with a new app. You know, there's serious problems in the way for example, the payments infrastructure works, inside individual banks and elsewhere that doesn't allow banks to easily adapt, right? And it's not just adapting to stable coin or this or that. It's all of these things. And, it's, I think it's a real challenge for them. I think one of the things that comes up and we're, you can easily see large banks, larger financial institutions having strategies, groups addressing these things. But is there also a place for community-based institutions for in the metaverse? That was one thing I wanted to touch on because, there are also a lot of smaller banks. Is this something that just passes over them?
That's of course one of the questions that popped up in my mind, only because I think so much of this is so far off of most smaller institutions' radar screens that they're not even having the conversations about where is there an opportunity. And unfortunately, a lot of that conversation was put off when people started insisting that the only way that's ever going to evolve is for them to have a branch in the metaverse, a digital branch in the metaverse. You know what? Branding in the metaverse is one thing, a representation in the metaverse is one thing, but actually having a branch where people can interact, that's such a narrow view of the potential of digital economies. So yeah, could there be opportunities for community-based institutions to maybe reach out to the youngest people in their markets and do financial education, to interact with them in digital spaces? Yes, absolutely. But in terms of the largest players in this whole ecosystem, it's going to be the larger institutions, I think.
Yeah. Well,
Jim, let me add to, I mean, obviously I'm not at all a specialist in community banks and where they're at. I do understand that they're probably behind, but the authors, make this argument about the underserved, right? That essentially they're saying that having a goal to have everybody banked, having a bank account and having that as the major goal, in terms of financial inclusion, they argue that it's the wrong goal and
Right.
that those people should not be served by the banks because it's costly, because they're regulated, because they really, their main business is credit. And what should happen is they should be served by others through what they call the smart wallets. And I
Yes.
really loved that chapter. And I think that, all bankers and fintechs should read that chapter about smart wallets. What are smart wallets? And from what I understood, they're really wallets, not like the ones we have today that are a little bit done. They're really uh, smart wallets that have baked in this digital ID that they talk about and can process instantly and cheaply transactions. So you don't need a bank account to be banked, so to speak. They think that it's a much better way, secure, less costly, and should be separate. I think this is a very big topic. I think they could write another book maybe on that,
I,
right?
t-
Yeah.
I totally agree, Epi, because one of the things that most people don't really stop and realize for low to mid income folks, there's so many that simply need a way to make payments. They need a place to store their money until they can send it out. When I stop and think about how much money I have on a Starbucks card, it's like,
Yeah.
wow, wouldn't it be amazing if I could pay my friend through my Starbucks app? There are so many things that can be opened up if we broaden the understanding of what some of our population actually needs in terms of financial services, as opposed to always saying we get this foundational checking account and then we turn around and get them a loan and get them all these other things. It's like payments is the major driver of a lot of activity that some of the lowest income
Yeah.
folks need.
Yeah, although that's my like one quibble because I've done some research and writing around this, and I think credit access is really important to the
Oh,
underserved.
I agree.
Um, so, but I think also payments, especially, when you drill down to young people, what's the first thing they want to do? Whether they're using a game, whether they're in the shopping mall, physically or digitally, they want to buy something, or they get money for their birthday or something else. They need to send and receive money, right? And that's also really huge. And banks make it really, all kinds of banks make it really hard. I think the advantage that community banks or credit unions can have is that they can work collaboratively together because they have organizations that facilitate that with emerging technologies. And I think that's one way that could help leapfrog them, into the metaverse and these technologies. And, they could work together around smart wallets rather than each, trying to create their own, but really trying to work together and leveraging that relationship, because that's actually what the metaverse is about: interoperability,
Yes.
collaboration, innovation, and creating these new services. So, I think Barb also mentioned that her bank, Coastal World, has um, they have a virtual experience of coastal style of banking. So that's uh, so they look at it not just in terms of here you're in the branch, but how do you fix up houses, and how do you talk to somebody, a partner, around home equity lines of credit. So they're already there. Coastal has a reputation, Barb's working there, for being innovative, for understanding the importance of these new concepts. And I think so it's possible yes, but they also have to realize that so many of the customers they want, not just the Gen Z, but others are living digitally. I think also the other kind of thing that's missing is understanding relationships between people that
Right.
require the exchange of identity, um, funds, you know, to do all kinds of things unrelated to banking. Like if you need to take care of a parent, an aging parent out of state, it's kind of a nightmare in the
Right.
US. I don't know about
Right.
other countries.
I mean,
So, so
one
go
of the
ahead.
things that I do have to say, because Barb's Community Bank is a prime example of a small community-based bank that expanded its business model to step into digital economies in ways that a lot of community-based institutions have yet to even consider. So they stand out as a model of how to rethink for a digital age. And so, yeah,
Yeah.
I'll leave it
So
at
we're
that.
at the
But
yeah, we're at the end of our half hour. So I just wanted to each of us to give a last takeaway from the book. What do you think is the major takeaway that people should take? Why don't we start with Effie?
I mean, we didn't even get to mention this. For me, the big takeaway is that there's a wake up call for banks and fintechs that the world is moving where most of the customers that they will be serving will be bots, not people. So they have to adapt their business model for that kind of reality. And the other takeaway for me is I'm going to be at the lookout for companies that do launch and have smart wallet strategies like the ones they describe, or preparing for that world. That's my two takeaways.
that's great, Effie, and I echo some of those things. My biggest takeaway from this book is simply that as much as this is about technology, these conversations about technology, the future of this is actually more about trust, because the consumers that we're talking about, whether young or old or the next generation or the one past that, our ability to kind of see the real opportunities for money in the metaverse are going to come when we as consumers actually trust the experience of that. We've seen that historically. It takes a while sometimes for things to catch on and become part of our routine culture. And I expect that that's all accelerating. Yes, things are happening much more quickly, but still, it's always going to come down to an issue of trust.
These are two excellent takeaways. I'll just put in my last uh, takeaway is that I think putting off the replacement of legacy payment and banking infrastructure is the single biggest decision and obstacle for banks to start down the path to any of this. And I think digital identity is key now before you think about the metaverse, even to protecting people and money and funds. And I think putting off this decision and justifying it is a huge obstacle, and possibly one that ends in disruption for banks. Not maybe as a whole, but specific banks that don't go down this path. So I want to thank everybody for joining us. We'll be returning January 17th. We'll announce the new book on our LinkedIn page, Fintech Book Club. So follow us so you get all the notifications to register. And I want to thank Jim and Effie for the discussion today, and we hope you enjoyed it. All right.
Thank you all.
See you in a couple. Thank
Thank
you.
you all.
Bye.